I welcome you all to the Economic Times CFO Digital Boardroom. My name is Pulkit Goyal. I am the CFO of Honeywell Automation India. Let's move on. Today's topic is the unknowns. Are CFOs future ready? It's a very timely subject of risk management. I, as a CFO, on a daily basis as well, come across so many such topics which I have to deal with, whether or not I have a technical expertise to understand or manage them. If I give some examples, some of the topics, I call them known risk, are whether I am secured as far as my data and the information are concerned, whether I will have a risk of cost overruns on my projects, whether I will have some supply disruptions, any compliance risk, or a natural calamity. While I know that these things can happen, but to what extent will they impact me is very difficult for me to estimate. On the other hand, there are risks which I don't know if they will happen. Leave aside the impact of them. Could be demonetization, acts of God, and unexpected armed conflicts, or even pandemic risks, which all of us have faced. However, if you see, there is one thing in common in all the management of risk, is to enable CFOs and the business and the CEOs to see these things as they come in and how can we manage them in advance. And from my perspective, it's become an important business competence as well for a CFO. With this, I'm pleased to introduce to you the panel of eminent Indian finance leaders and get their distilled wisdom of many years of experience, including some trial and errors. On the other hand, some proven real-world solutions. So please join me in welcoming our eminent speakers today. First one, Mr. Rakesh Bhatia, CFO of Tata Capital. Second, Second, Mr. Jitesh Kakarea, CFO of Moet Hennessy in Greater India region.
Hi,
Jitesh.
Pulkit. Thank you so much.
Welcome. Third speaker, Mr. Jayesh Jain, CFO of Hero FinCorp. Welcome, Jayesh.
Hi, everyone. Pleasure to be here. Thank you.
Hi. Fourth speaker, Mr. Mayank Khandelwal, EVP and CFO, NEC Corporation India.
Hi, Pulkit. Great to be part of the panel. Thank you.
Hi. The fifth speaker, Mr. Rahul Tewari, CFO of Games 247.
Hi, everyone. Very glad to be here.
Hi. Last but not the least, Mr. Rohit Agarwal, Head of Finance, UpGrad.
Hi, everyone. Excited to be part of this great panel.
Thank you and welcome once again. Really looking forward to the discussions that we will have today. So before we get started, let me throw a warm-up question to all of you. And the question goes like this. Are you scared of the unknowns or does it excite you on a daily basis as and when it comes? Maybe, Mayank, would you like to take this up first?
Yeah, no, very, very important question, like that you said, as the CFOs, we deal with this on a day-to-day basis, right? So the answer is maybe yes, it does makes me nervous in some situation, and it definitely creates sort of opportunity in few situations, right? So it all comes to, in my view, about what's the framework you have in your organizations, right? You will not be and never be able to estimate all of the risk, right, which you go through. But if your framework works, at least you will be able to assess and have some few scenarios and maybe planning ready for that. And again, on the opportunity side, Pulkit, it also create a lot of opportunity. For example, take COVID. I think we all have gone through it. It was a tough period for all of us, but it did create a lot of opportunity from organization, productivity improvement, efficiency improvement. Some of the initiatives which we have been trying and planning to implement got expedited. Maybe you can say digital transformation or restructuring, all of that. So to summarize, it's both, and it all depends on the situation and how organization or you as a CFO, your organization is ready.
So thanks a lot, Mayank. Absolutely right. Very difficult to say excitement or sadness? Rakesh, what would you say to this?
Yeah, so Pulkit, I'm maybe answering it on hindsight. Had you asked this question 20 years back, the answer could have been different. Now, after spending 25 years in the corporate life, being a CFO, seeing few events with the NASDAQ crash, 2008 crash, demonetization, and so on and so forth. So I think it's not about being scared or excited. It's about being ready or how agile you can be to respond to an unknown. And as you rightly said at the start, that you have known risk and unknown risk. Maybe I can go further and say there are known knowns, known unknowns, unknown unknowns, and unknown knowns also. So you can cut and dissect the risk the way you want. But I think what becomes important as we kind of respond to changes which are happening, which are outside our control, as an organization, as a team, as business support team, how are we able to adapt ourselves or be agile to respond to those changes? Because we're in the business of managing risk, right? And how quickly, I think the Moet theme has been off late of agility, and the velocity of change has been so high. So I think I will say not scared or excited. I think it's teaching me to become more agile, how to respond, how to rally the entire organization behind those changes or risks which are coming. And I think as Mayank also rightly mentioned, it also provides opportunities for differentiation. That's when good times everybody grows, but in the tough times, the good ones survive. So if you can make the differentiation in the customer space, I think it can help you to manage that risk well and take your organization through it in the sense. So.
Thanks a lot, Rakesh. And I cannot agree more. You're absolutely right. And now if I kind of take a few seconds to share my thought on this and before I go around. In these times, organizations make, I would say, unusual gains or losses. So if you make unusual gains and you feel, you're excited, I think it's going to be a zero-sum game sooner or later. On the other hand, if you lose money and you're sad, also it's a problem. So I think I cannot agree more. I think being ready and being agile is what it needs to have. So thanks a lot. Over to you, Jitesh. What's your view?
Yeah, I think if I have to sum it up, fully resonate with what Rakesh and Mayank said. But here's my perspective on it. Definitely not scared. I would say I take them as an opportunity to progress or even test my existing frameworks. So I've been privileged to go through or navigate multiple unknowns. The major ones were 2008, 2015 oil crisis, and obviously the COVID ones. One common theme for me as a human being that became more humble. As a professional, I would say that helped me make the business models more resilient. The theme in all these things were people were open to change. Nobody said no to a change. And probably for CFOs, that was the best time to turn every process, every cost, and probably every business opportunity into reality. So I think these kind of unknowns helps us open up our mindset, and that's very important. Back to you, Pulkit.
Thanks, Jitesh, for that insight. How do you see this as an excitement or cause of worry, Jayesh?
So my perspective, I think I would always feel it as an excitement. And I think Rakesh ji spoke, Mayank and Jitesh also spoke about it. And my thinking again is on the same line, just trying to give a little different perspective. As a humankind, as a business, change is the only thing which has been constant, right? And if the changes were not there, and probably some line of business which is constant, there are no unknowns, everyone would else repeat it, right? So the demand supply theory would always work out, and there would be replaceable thing which will come in if there is everything is known and unknown is not there. And can't agree more to what Mayank ji and Rakesh ji said in terms of agility. I think that's the only thing which is what probably, if you are agile, if you are nimble-footed, if you are flexible to adapt to the crisis which has been there. In fact, very recent history, if you look at it after 2018, I come from an NBFC sector. Those organizations who were kind of very agile, had a good corporate governance, good business acumen, not as you actually said that some bit of a excitement because of some bit of a short-term gain probably can make you a little happy about it. But if you are not kind of had values, had agility, had a short-sightedness and not the long-term kind of a perspective, and there have been collapses which is there, right? Couple of names which we already taken on the discussions. So I think unknown is gonna be there, and I would be always excited about it, but at the same time, I'm not gonna be overconfident about it. I would always be kind of because overconfidence is something which at the end kind of creates the problem. So respect the unknown and continue to remain agile and nimble-footed to take care of any such unknowns which comes in. And I think a lot of time the perspective from a CFO also, like since we all as a community, you would agree that deal with a lot of numbers and a lot of stakeholder pressure is there, but we should always keep it a long-term focus. And I think any unknown can then be dealt in a much more better and consistent manner.
No, absolutely. Thanks a lot, Jayesh, for that insight. So Rohit, over to you.
Right. Firstly, great to hear from all of their, our colleagues on the thoughts. I couldn't agree more with everyone. When I talk about, unknowns or even known risks, right? As a finance professional or as a business partner, what is our role today is that we play a big part in pre-planning for the organization. And that is where, the role plays very well. And the more pre-planned we are, the more we are able to, identify or do a decision tree to understand that, okay, what could be the unknown, and then what could be the, cover for that is what, will make us more prepared for, any sort of a scenario. And, as what Jayesh mentioned and Jitesh mentioned, agility will be there. For that agility, I believe for any sort of, whether it is a small or a large risk, we would not know. Most of the things comes from a smaller perceived risk, right? So being hyper, active or reactive about certain of those risks is very, very important. So that, we are prepared in advance versus we are, later at the time we are reacting. And that time it may not be very fruitful.
Thanks a lot, Rohit. Rahul, your views, please.
Sure. I think I echo some of the thoughts that coming from the panelists. I think is that in long careers we've seen a lot of these black swan events play out, and I think they've been playing out with so much of regularity that it's difficult to say that these are really black swan events. So I think as a professional, we have to just recognize and embrace change. And I come from an industry where we are disrupting traditional businesses. So being nimble-footed and being agile comes to us naturally. But from a CFO's point of view, you have to be far more strategic in terms of aligning yourselves to the let's say the core of the business, like the business model itself, right? Because a lot of these new age companies have new cutting edge technologies, and they have to survive in the larger context of the regulatory or the compliance landscape. So I think it's a interesting time to be looking at change and adapting to change. But I think some of the basic principles stay pretty much constant as you look at what people have done in the past and how we will react to changes in the future.
No, thanks, Rahul. I think one point that you raised really resonates with me a lot is being strategic. I think gone are the days when you just use calculator and kind of say that, okay, how my profit looks like. I mean, the times are when you're checked in with your CEO, sitting in the cockpit, and CEO asks, well, what do you think about this situation? I think that's a big responsibility, and you need to have that strategic thinking and a long-term perspective. So thanks also for sharing the view, and thanks to everyone for really providing great insights. And it now sets excellent context and also very interesting question that comes to my mind. Of course, when we talk of risk, I think the first thing that comes to our mind is the COVID-19. And it's been an event which was never heard of prior to 2020. How did you deal with it, Rakesh? And what were the lessons learned for the future from this unknown unknowns, as you described?
I think totally unknown in the sense, right? So I think it was an event. I'm sure all of you will agree that nobody wants to witness it again. And I'm grateful that, and I'm hoping that the peak is behind us. It also at the same time kind of proves the victory of the human spirit of the adversity which came in the sense, right? And I think as we mentioned about this unknown, parallel, a lot of things were also happening, like the velocity of change on technology was quite high. The regulatory landscapes were changing, especially for our industry. So I'll maybe kind of dovetail the question into the aspects also and try to answer Pulkit. So I think first of all, and I can, given the time, I'll try to, maybe we did multiple things within the organization. I'll try to bucket them in three broad themes so that we can optimize time for the other panelists also, and we can have some time for Q&A. So I think March, I remember, I mean, when we got this jolt, March 20, that the country is going to the lockdown. And I think like any other company, I'm sure every company did that. The first theme which we picked up was the employee well-being and engagement in a sense, right? Because it was such an unknown from a people perspective. I mean, being a hardcore CA and a company secretary, nobody could have ever imagined you can do audits offline in the sense, right? I mean, the guys will agree with me. So what we did was we as management rallied behind the employees, and being an NBFC, we have a lot of collections which happens on the field, right? And the sales which happen, especially for the products which are in tier 2, tier 3 markets. And it was important for the organization to not only ensure vaccinations, hospitalizations, emergencies, also to make a process that how we can have the frontline staff interact with that. We also had a lot of employee well-being programs which were held with the families for kind of making sure the mental health is good and everybody is given adequate support. So a lot of momentum behind the employees in the first 2-3 months. And I think what we did on the hindsight, we said as a management, it's not a event which is here for a month or two. Maybe we'll take a 6-month view and then focus our business model around that, and then come back and revisit after 6 months. So that call helped on the hindsight. I mean, we could have been saying, okay, short-sighted, ek mahine mein ho jayega. It was not like that. So one entire spectrum was on employee engagement. We shifted people from credit to collections. As HO also, we started coming in office as early in mid-May or June to make sure that we are providing that support. Although moral, sitting out of the Bombay head office, but the collections team see that we are visibly there. The second, of course, iteration or optimization of the business model, which we did, was we kind of reined the growth, and we said we'll grow with caution. And if the growth has to go, let it go. It will not go at the cost of quality. So being an NBFC, the asset quality, the net NPA becomes very important for us. We almost braked our disbursements in Q1. I mean, we were maybe at 2% of what we do on a quarterly basis. And as things came back, we started, picking up the business and started lending to the corporates first, and then to the less impacted segments on the retail side. Being an NBFC, liquidity again was core to us. We were trying to ensure that the liquidity from banks is ample. We had buffer liquidity to take care of our commitments for the next 2-3 months. We also knew that the collections will take a dip. If we were operating at 98% collection efficiency, it went as low as 60% also in the first 2 months, right? So that also became a huge challenge. But I think the blessing in disguise which happened during this time, and thanks to the UPI backbone which the government of India has set up, a lot of our collections by default moved digital. And the benefits of that we are still reaping now. And I was just reading an article that the UPI transactions now stand as 15% of India's GDP. So I think kudos to the Indian government to give us that framework. And I take heart out of it that as human mankind, we were agile, and our population now has moved to the UPI. So big collection of ours thrust, 99% happens digitally now. So that's been a blessing in disguise. Apart from these two broad themes, I think we took a timely call to invest on digital. So we went digital, we had laptops going to each employee's home, we connected, we had customer journeys which were digital, the customer service angle was totally digital. So we invested a lot of weight behind the digital initiatives and made sure that the customers are not impacted, whether it is the origination part or the servicing part. And I think the fruits of that we still are bearing in the sense. So I think three broad categories, Pulkit, in terms of how we responded. And I think I also take a heart that As management, when we responded of the challenges, we always kept people at the core, and we revolved our business model, especially in the first 4 or 5 months, which were sensitive because people were grappling with how to deal with that, issue and everything. So I think, and a very continuous, we were having weekly meetings and sometimes daily meetings on liquidity, depending on the call of the month. But to sum it up, 3 broad themes: the employee, we grew business with absolute caution and focused on liquidity. And third, we invested in digital. And I think it also proved a testimony that me, a guy who's a very pessimistic guy, I became even more, a very optimistic guy. I became even more optimistic that anything can happen, right? People were challenging, no, this can't happen. We said, no, this will happen. This can't happen. No, this will happen. So I think a lot of pessimism which used to sit in the organization or the rooms has kind of gone away. Now it's shown us an example. And I think it's for us to build on this, that how an unknown can be capitalized to your favor. You can differentiate it. You can digitalize the services, still retain customers. And at the same time, when the pent-up demand comes, you can capture the growth to become the market share which you were aspiring for, in the sense. So sometimes 3-6 months breaks are good to, refuel the engine, and then you can bring it back.
Excellent insight again, Rakesh. And I take away from here that even if the risk is unknown, but I think give it time and understand it, and then actually try to convert it as a known risk. So thanks a lot for this, and a great takeaway. And digitalization and employee well-being, and of course, keeping an eye on the liquidity have been, I think, for you the key successes there. So, and thanks a lot for that. And making another question and trying to, of course, make it a little bit more complex so that our audiences also benefit from your real world experiences. So as of now, as we just said, there are a few known unknowns which we are dealing with, and geopolitical crisis that's happening in the heart of Europe, supply chain crisis, inflation, among others. We do not know how long these individual unknowns will continue, or when the issue of inflation or supply chain will die down. How do you tackle such issue, Jayesh, and what are your plans for the future?
I think just probably a lot of what Rakesh ji said applies to the supply chain issue also. Maybe I'll try and give a little different perspective. And I think even in my opening remark, I was trying to mention the same thing. When you build businesses, when you build profitability, when you build your natural growth aspects and the plans, a lot of time we all, as a human being, as a finance professional or as a business professional, are actually very kind of bullish or optimistic on the supply side, be it labor, be it your cost of funds or money, be it your supply side. We all believe generally that these all would be available on tap. And that is what generally happens. A lot of time, the business's focus is on the revenue side. They are all looking at it. How do I kind of multiply the sales, multiply the volumes, multiply the disbursements? How do we get every bit of a revenue from customer? There has been concept of lifetime revenue on the customer, multiple sale to the same customer, and the focus kind of continues to go there. And that's where there is a little bit of a what you will say, being overconfidence or being kind of a little lazy on the liability side or the supply side or the raw material side, what you call, right? And that's where whenever there is some unknown which comes in, probably hits you. And the way probably I have kind of always tried to drive is keep something up your sleeves. Don't run tight, right? So even on a supply chain, you have to build in some bit of a disruption. I think the one thing which has happened over several last couple of decades with the kind of a post these reforms and opening of the economy, since we want to grow leaps and bounds and kind of multiply the growth, we have been kind of running and pushing ourselves hard and keeping less margins. So this less margin is something which is what probably is causing problem, even in terms of the profitability. And then the another thing which is happening is, I think, considering the kind of the business environment where valuations, where the profitability and everything quarter on quarter kind of is pushing you, chasing you, a lot of big money coming in and kind of But I think as a CFO, as a business people, I would actually always try and keep it for a longer term. Some bit of a failure, some bit of a pause is okay, right? You have to learn to say no. You have to learn to say that I'm going slow. Probably the raw materials are not coming in, or supply side issues are there. You factor in, and then probably as and when the time comes in, you double down or double up. A lot of time I've seen and see while you spoke about a supply chain issue and raw material not being there. I've seen, or there have been a lot of examples where surplus capacity or production capacity has been there, and then you again run the risk when the demand slows down for various reasons, which is what probably you also tried asking in your question. Inflation is gonna definitely impact some part of the consumption, and then what happens? Then you are ending up sitting on a excess supplies, excess bandwidth which you have created. So I think the way probably I've generally driven, and I kind of a guide or work around along with my colleagues over last several years, is try to be balanced, not try to outgrow and take too larger risk, trying to balance it out and always keep in mind the supply side issue, not take it for granted. Diversification is something which is again very, very important. In fact, on the first point again, which you had mentioned, that quick money, right? You generally say, for example, someone probably got a very good supplier from Ukraine, and the company did not kind of a diversified and dependent only on a supply from Ukraine. Now suddenly you may find that particular company in a difficulty. So diversification and risk allocation and spreading risk is always a great strategy. And one thing which I always kind of advocate is, even if you are making up, say for example, 2% or 5% lesser margin for spreading the risk or diversifying, it is always worth to kind of take that cost and spread yourself. It is a cost of doing business. You can't be just making money by reducing your price and being competitive there, and then trying to run very, very thin on the raw material or the supply chain side or pushing yourself. It doesn't help that way. So Pulkit, that would be my brief perspective, probably in the supply chain side, and how do you try and manage the unknown arising out of these kind of situations.
No, thanks, Jayesh. So I think absolutely right what you said, especially the point that I like is diversifying and not keeping all your eggs in one basket, and at the same time, really closely monitoring unusual gains as well as unusual losses. So thank you for that answer. Looking at you, Mayank, what do you think about now RBI increasing the repo rate to tame the inflation? Hi again, and to also counter aggressive stance of the central banks of the advanced economies. How will this impact businesses in India as a whole, and in particular your business at NEC?
Yeah, thanks, Pulkit. And as we all know, I think this is a very sensitive topic right now, right? Not only in India, but globally. I will say RBI has played a very balancing act with the timely intervention and balancing both the inflation aspect as well as the growth aspect. So we may see, because of those actions, maybe growth getting impacted a little bit in short term, but there are multiple factors, as I said, inflation, global growth, and India is still growing with, even in this situation, right, 7% plus. So that way, I think it is pretty strong growth, and I will say RBI has done a pretty good job. Now, to your question on impact on the business in India, I will say different segments will have a different impact, but there are three broader categories, right, or the three critical areas where we will have to go a little deeper and how it can impact the business. The first is the direct impact of cost of funds, as borrowing will become expensive, is getting expensive for everyone, right? The fellow CFOs can validate that. Impact, how does it impact the inflation, right? That's another second factor. And the third one is, how does this rate increase impact the product or the services which a company is into, right? So how does it impact the demand side? And as I was telling, I think the impact or the assessment on these three factors will be different for different industries. So let's take an example of real estate, right? Currently, the demand is strong, and we have seen in general the property prices are going up. So this rate increase may actually act as a balancing factor by reducing or putting a little bit of pause on the demand. I will not say it will get impacted very significantly, but a pause temporary but also increase the supply, right? As the sellers may come on board and also try to take advantage of the higher prices. So it will help as a maybe as a balancing act. And sector in general is going through healthy growth. So I don't see impact of rate increase that much. Short term, yes, there may be, but in long term, the sector still remains and will be able to see the healthy growth. Manufacturing, again, a very important sector, Reem. And again, the major factor which will be impacting the manufacturing is the cost of funds going up. But this is again, or may help to reduce the inflation side, right? So if you see, and again, what we are seeing in most of the businesses right now is everything is becoming expensive, whether you say inflation or on the wages, materials, so things are getting expensive. So if the interest rate can actually help cool off some of the pressure on the inflation side, I think businesses and manufacturing, we've not seen such a strong buoyancy in many years, right? So things look pretty strong, and the sector should be able to absorb the increase in interest rate. Financial sector, I think bank in general should be able to pass the cost in the long term and should not impact their profitability a lot. And definitely Rakesh and others can validate that from the financial sector side. Credit demand still remains strong, right? As we have seen, India economic indicators are pretty strong. We will still, in the worst case, grow between 6 to 7%, right? So we may see a portfolio softness, like maybe in short term, the home loan may become a little softer, but then the banks may start seeing industrial demand coming up. So that kind of will balance it out. So that's on the financial sector. Services, again, should remain strong. And because in most of the cases, service sector should be able to pass their cost, right? So if the inflation can be managed, I think they should be pretty good. Now, the next sector which we will come is the project side of the business, or this business which have got the long gestation cycles, all of that. So how does it impact? In short term, because many of the projects, they do factor the interest cost, right? And that's one of the important factor, given the project size are long and sometimes it requires pretty significant cash flow being blocked. So short term, the impact can be there and will be there. But again, this segment is again going through inflation challenge, right? As I was saying, for the manufacturing, we are seeing costs going up, whether you buy imported item or you buy through vendors, all of the costs are going up, including the cost of the manpower. So if the inflation can be kept in control because of some of the rate increase which RBI and the central banks are driving, I think it can be pretty well managed, right? Another important aspect of rate increase, which we will have to again consider, is the impact on currency. And how does it impact, right? And we know both interest rate and inflation are the two important factors which has impact on currency value. So with other countries increasing rate, and I think it was actually mandatory for RBI to increase the repo rates and all of that. And actually, I will say it will then help increase and provide a little bit of support on the rupee side. So that's the impact on the currency. To your second part of the question, Pulkit, as to how does it impact the NEC India, I think so. I mentioned some of the segments above, right? NEC is present in few of the segments. We have a big project business where we do a lot of smart city project, transportation, and logistics solution, both for the government sector and enterprise. So I think those segments in short term will be impacted because of the capital cost going up. But as I said, inflation, if we can manage it and it can help cool off the inflation, then I think we will be good. On the product side of our business, right, we do submarine cables and implement those projects, telecom, networking, displays, all of these are product-based, right? And again, we have been seeing supply chain challenges happening in those segments also. So interest rate as such will not have a direct impact, but I think if the inflation can be cooled off and some of that can help improve the supply chain challenges, I think we will kind of be better off and will be healthier in the long run. So that's, I think, my submission and a little bit of insights, Pulkit, on interest rate and how is it impacting different segments and sectors.
So thanks, Jain, quite helpful. And I think the summary here is that India is quite well placed. And of course, there are some macroeconomic challenges and the dependence that India has on other economies. But so far, the actions taken by the central bank are in the right direction. So it only boosts our confidence. So another maybe exciting time for all of us. So thank you once again, Mayank. And let me turn the table. Though we are running slightly behind schedule, and I'll kind of speed up our discussion because I want to give also opportunity to our audiences the listeners to ask, and I see excellent participation right now and a couple of questions coming up. So let me turn the table to Jitesh now. Jitesh, a question to you. I mean, we have been hearing about the economic slowdown or global recession. What do you think? Will it be a blessing in disguise for India, or will it also adversely impact like other developed economies? What's your take on that?
Yeah, no, I think great question. And I think Mayank has already given the right foundations for it, and I'll build on it. So just a little bit of data points here. India failed to unseat UK to be the 5th largest economy just by 10 billion. This was 21-22. So let's look at what economies are ahead of us. We have UK, we have Germany, we have Japan. Obviously, we want to be 5 trillion. I don't want to speculate which year. Now, very, very similar situation, what has happened in any organization in a black swan or any other condition. Some people are on a stress situation and some people are on a positive situation. I strongly believe that Indian economy is on a strong position. Now, it has very, very different drivers for it. So, yes, certain other economies have been impacted because of supply chain, because of inflation, the way their economy shaped up. We have been obviously relatively less impacted. And why is so? The first and the foremost reason is our diversified sectoral base. We have our different sectors, which is like agriculture, ITS, I mean, Infosys and TCS of the world, then manufacturing, and then there is a growing sector of startups. So our diversified sector base is helping us economy in a very, very constant or relatively constant state. Secondly, I would say the investments which has been made by either the central government or the central bank to make the economy self-reliant. You talk about any production-linked incentives and probably safeguard our import bills through, I would say, moving to the better sources of fuel is another thing which is helping us now, right? Which we have started investing over a couple of years. The last is, I would say that the confidence which has built in foreign investors and now in domestic investors also. The kind of ride domestic investors are making in the economy by investing. I think that's amazing. Now, this is also due to the economic policies, the ease of doing business. I mean, there are multiple factors which is giving us the confidence. And building on to what Mayank said, I think RBI has done an amazing job by matching up or mirroring up the interest rates, even much more advanced, or are they advanced that interest rate increases, anticipating this is coming our way. I mean, a close to 200 bips point in last 6 months, that's amazing, right? I mean, they knew that the currency will deflate. They have depleted their forex reserves. They have come in and safeguarded the currency. They have safeguarded the foreign investment flows. There was a lot of outflows. They came in, they increased rates. Now the inflows are back into the system, right? So I would say that the India was rightly placed to be growing, to be a 5 trillion or to be a 4th or a 3rd economy in an X period of time. With these external factors which are testing the, I would say, the business models or the frameworks of different economy, we are being more resilient. Probably the journey has been accelerated. And I can tell you that, yes, we are a developing economy. A lot of global companies wants to invest in us or probably invest more in us. With this coming up, and there is already a shift of production, there is a shift of investments. They know that this economy is resilient. So let's put our money on this one. So that is itself a testimony that we are on a faster pace. I don't want to call it as blessing in disguise because I think then I want to ride on somebody else's shoulder. I think we were very well placed. It's just that it has accelerated us now. Back to you, Pulkit.
So thanks, Jitesh. I think I cannot again disagree here at all that the way a central bank has handled it, and I think the confidence that they are kind of showing in their policies. And I remember, I think the news headline a week ago that we stopped actually looking at now the forex reserves, because we know that we are doing the right thing. So but we have to take care of what's happening inside the country. So thanks for that input as well. Looking at you now, Rahul, I mean, you are from a technology company, Games 247, and the world is now much more technology enabled, and the information is coming from all the directions. By the way, that also makes CFO's life even more difficult. And I'm sure you're also encountering unknowns every now and then. There must be a pressure to take action immediately. How can we ensure that we are making the best decision in a vacuum of uncertainty?
I think it's a important context, in the context of the consumer internet industry, right? Because we have an architecture where we are flooded with data. But I think how we deal with uncertainty is a very important aspect. And I think what you do during phases of relative stability will define how you respond to a crisis. So as they say that you prepare for war during peacetime, I think that's exactly what you do in terms of preparing yourself, for the unknowns. One way to think about this is that when a crisis hits, your degrees of freedom are very, very limited, and there is so much that you can do within a very short period of time. And the only way you can come up with the right response is to have an organizational culture, which depends on things that can make you very, very nimble and agile. And a couple of things that come to my mind. For example, I remember that Peter Drucker said that culture eats strategy for breakfast, and that's not to say that strategy is less important. But I think what really is important is that the organization at a very fundamental level is agile enough. And I think the CFOs are playing a very, very important role here. In my company, for example, when we were hit with the pandemic, we had a very, very different outcome. Suddenly the number of players who are coming on our platform just skyrocketed, within a matter of a few days. And, in terms of, this was like a very positive crisis that we had. Our tech architecture had to scale up dramatically overnight. Our product had to mature to take care of, new kinds of players coming on our platform. So it was all new learning, but I think the way we addressed that was that as a culture, we are data obsessed. We have democratized availability of data, down to the, to every level in the organization. And that really helps the organization pick the signal from the noise. And that I think is becoming extremely important for the management teams to be able to respond to a crisis. And I think what is also happening is that our ability to leverage data and use it for decision making has also multiplied. Today, there are all sorts of predictive artificial intelligence technologies that are embedded in the core decision making. And I think all that really helps think about uncertainty and unknowns. And I think, more organizations can use these technologies and data models, the better prepared they will be to deal with potential crisis.
No, I think well said, Rahul. I think a very important point that you made here is the data. Without data, I think you're just a person with an opinion, right? So I think it gives you fact-based information. Also, you can build on your experience of what had gone wrong in the past and how you're better prepared. So thanks once again for this insight. Moving on with my last question, actually, to the participant here, and over to you now, Rohit. What do you think? In this time of uncertainty, what kind of change management and employee skilling and the change of mindset that is really required to work against these unknowns? Because of course, on one hand, we talk of getting prepared and using data, liquidity and digitalization, but there are many things which we need to do on the people side as well. What's your take on that, Rohit?
Yeah,
Thanks a lot, Pulkit. So I couldn't agree more. In fact, as an organization, UpGrad is empowering people as well as companies to transform digitally or prepare for the unknowns. Right? Imagine in our parents' life, they were changing jobs in probably once in 20 years, 25 years. Today, the youngster is changing the job every 3 years, which means he's in need for a new skill every year or two, and so is the organization today. What Rahul was talking about, people are moving from physical to digital, and a lot of data is being generated out of that. Artificial intelligence, predictive analytics, AI, machine learning is something which is becoming part of the each core of the operations of the business. So the people behind, in any function, whether it is finance, whether it is non-finance, cannot stay out of it, right? So from an organization perspective, they need to focus on their talents, industry readiness, given the onslaught of the technologies which are redefining the business models itself, right? They need to focus on ensuring the talent upskilling towards resulting in qualifying them for industry readiness, and not just viewing the video or reading a textbook. They need to be ready with practical insights or practical applications of it. The skilling and plan should be standardized across the organization in order to scale, right? The talent skilling should be related to a business outcome which has to be defined before the start of the talent skilling program itself. And in case of finance operations, for example, driving the productivity of the operations or involving in improving the efficiencies or predictive forecast, for instance, for growth prediction, and tracking the KPIs for ensuring that the business is doing what it was supposed to do, is something which could be predefined skilling way in which it can be done. And last but not the least, the organization should be able to measure the skilling outcome post the talent skilling. So if you do all of this, a lot of the unknowns would be kind of ironed out, and there will be a change management, because the organization itself will become active rather than reactive to any situation.
Got it. Thanks a lot. Again, very good insight. And what would be the Brahmastra? And our international audiences, if you do not know what Brahmastra is, it is the most powerful, destructive, and irresistible weapon in the ancient Indian mythology. And by the way, it never fails. So several notches above even the crystal ball, which only tells you what's going to happen in future. But this not only tells you what happens, but also addresses it. So with each one of you, and let me start with maybe Jayesh. What do you think is the Brahmastra in your mind? And I give you 15 to 20 seconds.
I think the Brahmastra would be agility and being flexible. A lot of time we all get fixated to our ideas and our thesis. We need to be questioning it again and again in light of the latest developments.
Okay, thanks, Jayesh. Rahul, what's your view? What's your Brahmastra?
I think it is again, dealing with uncertainty, but with a framework, right? And be prepared for all kinds of change.
Okay, thanks. Rakesh, what's yours?
Tough one, but if I want to attempt, I think I'd rather bet on that so many things are happening in the ecosystem. Have a view on the future and act on it in the sense. So you may iterate it during your journey, but have a view and then become agile and act on that.
What about you, Mayank?
Okay, this will be, I think, two things. First is, and I think one of the panelists touched is, but having a framework, right? First to assess the enterprise risk and then to manage the risks. That's one. And the second important aspect is the cash side, right? I think we as a CFOs plays a very important role, and managing cash during these times is going to be very critical. So I think those will be the two very important Brahmastra in my view, which can help tide some of these unknowns.
Thanks. What about you, Jitesh?
I think I will go with first one as same as Mayank, the framework. or the scenario building or the contingency planning, whatever you want to call it. And the second one is that empower employees to deal with the 3 C's. So again, Mayank, I'll steal one of yours, which is compliance, customers, and cash. I mean, you empower, you take care of your employees, they'll take care of everything. And if they focus on these 3 things, I think we are home.
Okay, maybe Rohit, you can answer. Yeah, please. Rohit.
Yeah. So I would actually, if I put it in one word, maybe I would always want to be in a lifelong learning mode, and that would be my Brahmastra, and it'll solve for a lot of things.
Okay, thanks. Before I conclude, that's why I was kind of bringing a little bit pace in the second half of our session. I have few questions, a lot of excitement I see also on the audience side. Thanks a lot for your participation. Thanks a lot for posting the questions. I'll take 2 questions in the interest of time. And the first one goes to you, Rakesh. It's asked by Mr. Ashish Gupta. His question goes like this. An important part for the business is also how the investment in right innovations, opportunities is needed, which is another unknown, by the way. How you take it up in the business in distributing your investments as a CFO?
Yeah, it's a really tough question, and thanks, Ashish, for asking it, because innovation backed by technology is becoming increasingly difficult to scope. On the one side, you have the external world, which is dictating the challenges of the innovation, the disruptions which are happening. On the other side, you have your internal requirements, which are on your core systems. And an added layer is the lens of the regulator changing fast, and also the compliances which are coming for the CFO desk in the sense. So let me try to attempt in these 3 facets in the sense. And I think you can spend $100 million also on technology and you can still be unhappy about it also, right? It's a double-edged sword. You have to be conscious of it, that the ROI is correct, and you make the best use of the tools which are deployed on it. So the way we fragment is like, if you look at the first facet, which is the internal layer, and for an NBFC, typically you'll have the LOS, then the LMS, then there'll be a data lake, there'll be a visualization layer, which will run through. And just to put out, Pulkit, to your point on upskilling, in finance, I have guys who write Python codes and SQL and extract reports from Tableau. The world has changed, and how in the sense, right? So coming back to the question, I think when you look at the internal requirements, I mean, it's a no-brainer that your core systems has to be stabilized. They have to run 24/7. So any investment which is there required for a customer interface or regulatory interface goes without questioning, right? So that's the first layer. The second layer becomes when you are trying to do journeys for the customer to make the entire thing more digital rather than giving up, we have to submit papers or document proofs and XYZ, or the KYC norms which comes in the sense. So you also have multiple projects which are running on the customer journey side, which becomes important. And then is the regulatory landscape side. So what happens is, I think the task or the difficulty with us on my table becomes when I have 40 or 50 such initiatives which are running, how do we time it to the extent of the width and the depth of it in the sense? And at times, often we have seen that we've implemented something, but it's not got picked up by the employees with that same, momentum or what we wanted to do in the sense. So it's a very difficult question to answer, but if I want to pick a thing, I mean, as a CFO, I'm very guarded by what's happening on the external world. If there's some fintechs coming and we should also jump into it, we take a time to absorb the changes which are happening right now, especially fintechs where there's a regulatory arbitrage, which will go with time, in my view. So we're very conscious that we will not get governed by what is happening in the external world. Sometimes not acting is also a good strategy. What we're looking is that what at Tata Capital we want to do in terms of, giving a huge differentiation to the customer, being compliant to the T, solving our tasks, making our core system stronger, making data layer or data lakes so visually, as I think Rahul alluded on the analytics and the credit core scorecard side, and giving that wow experience to the customers. I think that becomes the logical decisioning framework for us. And at this same time, I can't ignore what's happening in the external side. So we keep on backtesting things which are happening on the external world and see. And a lot of good work is happening in fintech, especially on the credit underwriting side, customer service side, and then digital journey side. We pick those threads up and see which is happening. The other difficult dimension, just to maybe Pulkit take one more minute, is always this dichotomy of having talent which is in-house versus outsourced. So if you want to be agile and if you want to keep technology at the core, often you will see that a lot of the IT talents is in-house, because then you can turn on your application at a much more faster speed, and you can dictate terms rather than being dependent on the vendors. So that's the other, angle which comes into it when you're looking at your entire budgeting from agility and keeping IT at the core of everything what you do in a company. So no straight answer. I think it keeps on oscillating. We keep on questioning ourselves. We keep on back testing, and we just go back to the core. What's in for us when we're doing this project for our customers or the regulators, rather than just getting swayed by what's happening across the globe. Yeah.
Thanks, Rakesh, for answering the question, the last one, and I'll open it for all the panelists, anyone of you would like to answer. The question is from Ms. Kalpana Nirala. What plans do we have to manage the manpower and business cost versus the current inflation? And also, how about the ripple effects we may face in the near future from the Ukraine-Russia war?
Maybe Pulkit, I will take a lead on that, and then other panelists can add. So see, again, it all depends on the industry you are, but there may be few options, right? That in few situations, you may not be able to pass all the cost which you're seeing from your inflation, but it then comes to how you are realigning your asset base, right? And trying to get productivity out of some of that. So maybe restructuring your organization and trying to see how do you add more value for your customers. In that case, you can go and ask for a better pricing or a better value share with them. And also sometimes changing the business model, right? You cannot just work on a cost plus model, but when you work on a revenue sharing or different models. But I think that's the way how many times you have to be innovative in short term and in medium term to try and balance these inflation aspect out.
Okay, if I can pitch in,
Sure.
I think wonderful question, Kalpana. And the one question probably should be asked by the CFOs while kind of sponsoring these kind of expenses is the sustainability and the continuity. I'm sure everyone probably experienced last year there was a huge demand of IT folks, and there was a huge turnover on the IT folks and the IT talent in the country, right? The guys were getting two offers while serving notice periods, and probably we know the last 3 months story as well. So a lot of time when these kind of demand would come to CFO or to as a business head, probably we'll have to figure it out. How do you want to balance it out, and what is the sustainable thing? I think sustainability is probably one of the key things when you look at any kind of there's several things which we spoke about in terms of the risk, in terms of the growth, manpower. I think attachment, the values, probably that all would work out evenly.
Got it. Thanks a lot, Jayesh, for answering it. And a great session, great takeaways also for me. And I think the first takeaway for not just me, but also all the audiences here is, I think the change is constant. We cannot control these knowns and unknowns, so we have to accept them as they are. But what's important, and all the panelists unanimously believe that being ready, but not overconfident, but being strategic, as well as being agile. I think that's the first takeaway, and make sure that whatever strategy or the framework that you have in place is based on these fundamental principles. Second thing that I learned, and the takeaway for me here is that while there are some macroeconomic risks that we do foresee, and they are falling into kind of known risk. We don't know to what extent will they impact us, but again, unanimously, most of the CFOs here believe that Indian economy is well placed, and its indicators, macro indicators are pretty strong, and they don't expect a significant disruption coming on those sides. And third and the last, though it becomes a challenge for me now to talk of Brahmastra, if I have to encapsulate everything into one, for me, the Brahmastra would be a CFO playbook, which is based on your lifelong learning, which is based on flexibility, which is based on agility, data-driven insight, and last but not the least, upskilling and focus on employee well-being as well as their talent management. So thanks a lot once again. Excellent session, and looking forward to see you all again in the next one. Thank you.
Thank you, Pulkit.
Thanks a lot.
Thank you, Pulkit. Thanks,
Thank
everyone.
you.
Thank you so much.